Peter Grosskopf is CEO of Sprott, a leading precious metals and real assets manager and big investor in this space. So I want to start with, if you don't mind, what on earth is happening to the price of gold today? Seen a bunch of theories, margin calls elsewhere, calling for selling in gold. Just maybe fear spreading? What's your analysis?
I think when gold was at the 1650 level, there were a few margin calls that we heard about. But in the last day's trading, I think this is more about indiscriminate selling by risk parity funds of any asset that they require to deleverage and de-risk. So we've been told, our trading team has been told it's more due to flows coming off the large institutional desks that are just getting out of anything that has any risks associated with it.
Does that then make sense that, because I was interested to see it's not just bullion itself that's trading lower, you would expect a correlation with the majors, but not the steep declines you're seeing in names like Barrick and Newmont today.
Right.
Why are they selling off?
Well, I think it's definitely that, gold is about 1/3 the volatility of stocks. So when gold declines by 3 or 4%, you're going to get a multiple of that in the equities.
And so in terms of where you think this goes, we've definitely, it's had this incredible run. Along with what we've seen, right, the long-term trend in treasuries just speaks to the environment we're in. People are worried about the value of money. We're worried about where yields go and do they go negative. Is the prospect for gold still good generally? I
think it is. So no question that it's been up so much this year and over the last 2 years is part of the reason for today's profit taking. I think in the long run, as a hedge against inflation and money printing, the thesis is still sound. So I would describe this as a short-term down move due to liquidity within a longer-term bull market.
So then where do you think the places to be are, just in terms of the big volatility in the majors says? I know you go down market a little bit from there.
We do.
There's still good opportunity to be had there?
I think so. So the majors are all in great shape. Their margins are good, their earnings are good, cash flow is good. So they will use these opportunities, we think, to consolidate projects which are now on sale and build stronger businesses.
We obviously the trend may be our friend, but low rates are here, have been here. We now are hearing new calls for central banks to go even lower in near term.
We'll see how fast.
What's your thought about the effect that's having on the price of gold?
Well, I don't think it's worked in yet. So when and if the Fed eases again, which we think is now highly likely, I expect that gold will catch a bid, and that continued monetary accommodation as well as fiscal accommodation to try and prime the economy is highly likely, and that's all very positive for gold.
Do you see this as a trend that takes gold to a certain price point? Can you give me a forecast on the price of gold that you have in mind?
So I was just reading the charting decks earlier this week, and all of those price calls were converging around the 2000 level. But there's a fairly large channel in between, and gold had been on a strong run. So the correction right now looks pretty severe. I think we're going to get into value territory very soon.
Is there new production that comes online as gold stays at these levels?
Don't think it gets impacted that much. So some of the projects in Canada and Australia particularly were being built up, but the effect on global production is negligible. Overall, the industry has more of a problem keeping up production, with declining reserves being the real story.
So this won't reopen mines. I'm thinking like Barrick's mine at the top of the Andes. We won't see them reopen mines that have been deemed unprofitable?
I think those have so much larger issues that short-term moves in the price of gold won't impact at all.
Yesterday, we had the market shut down here for a technical error. Literally, the market couldn't handle the volume.
Right.
We just heard Art Hogan be very forgiving about this. I feel like some people would be less forgiving when they were sitting at their desk unable to trade.
Yes.
What's your analysis of how this will be perceived?
I didn't look at it in too much detail, to be sure, but our stock trades just as much, if not more, in the U.S. market, so we weren't that impacted. I think anytime an investor feels like they're being shut out of the market, they're going to get even more nervous, so that probably happened in Canada.
And we have the interim CEO on the network. The messaging system, which is literally the part that takes the buy and the sell orders, is what couldn't handle the volume, which seems to me to be a pretty core part of that business. In other words, that's what they do that we care about. Again, I've heard a kind of a forgiving view from one trader, but in terms of their inability to keep up, does that kind of make us look foolish a little bit?
You'd think they could solve those problems. They're in the business of providing technology and trading access. So yeah, it doesn't look good, but it's hopefully a one-day event.
Hopefully. Great to have you here.
Okay, thanks for having me.